Hello and welcome to Bloomberg Quint. We are live on Facebook and Periscope. Today was the second day of the GST Council's 3-day meet and we don't have any finality on the GST rates as yet. And don't pin your hopes on any announcement on this front tomorrow either, because the Council has decided to cut short its 3-day meeting and will huddle next on November 3rd and 4th. So all we have today was the discussions that the Council had, and here we are discussing those discussions with KPMG's Sachin Menon. Sachin, thank you for joining us here on Bloomberg Quint. Sachin, before I come to the some of the discussion points that the Council deliberated upon, are you disappointed that we don't have any visibility on the final rates as yet?
Well, we have expected that perhaps there is a finality with respect to the rate slabs and as well as some certainty with respect to the way forward. And I think perhaps this is not happened in this meeting today.
Right, and it's not going to happen tomorrow either. But you know, the finance minister sort of made a statement and he said that, look, we have nearly converged on the source of funds which will be utilized to compensate the losing states. And that source of funds looks like is going to be cesses. Again, are you disappointed that, you know, cesses are making their way back into a regime that was supposed to subsume all the cesses in the first place?
Well, the purpose of bringing GST was to reduce the number of taxes and bring a uniform tax. And the taxes proposed to be abolished, among them, cess was one of the major items. Now, having said this, now with this proposal, it seems that cess is making a comeback through the back door, and which is not in line with the GST principle. So therefore, you know, people are not very happy from the industry that you are bringing a new levy in addition to GST, maybe for next 5 years, but perhaps this could have been avoided.
Okay. Sachin, I'd like to delve a little deeper into this cesses issues and 3 points really. First one is this the only source of funds that, you know, the Council could think of, or probably we are speculating at this point, to compensate, as the finance minister said, the losing states?
Not really, because see, the government is expected to have a buoyancy in the revenue by introducing GST. Perhaps the concept of the deficit or the expectation of a deficit itself may be a myth. You never know, because if the GST is implemented properly, then there may not be any deficit in the hands of any of the states for that matter. So therefore, this is a kind of presumption that there will be a deficit, so there has to be a way to finance those deficits in the form of compensation to the states which are falling short of revenue compared to what it is agreed on under the compensation formula. And if you look at the economic analysis released by various economics in last couple of years, nobody said that there will be a deficit in revenue collection. Okay. They said it's broad-based and it will enhance the revenue of the state and center. And one of the most important beneficiary for this GST implementation is Income Tax Department. Because once GST is implemented, it will be impossible for anybody to do business in India without having a registration under GST. And once you register under GST, every transaction in the supply of service or goods, all will be coming in the mainstream. And this itself will reduce the black money transaction, cash transaction, and certainly it will increase the income tax collection as such. And thus income tax collection itself is good enough to compensate the states if there be a deficit. So it not necessarily they have to embark upon a cess for the purpose of compensating that. Second thing could be that the center it's only for a temporary period of 5 years. That much.
Because it's for those 5 years that at the rate of 14% per year is what the center is going to compensate the states, right?
That's right, that's right. So 2015-16 has taken as a base year for compensation, and year over year a 14% growth is envisaged for the purpose of paying out the compensation. And therefore there can be another mechanism by which they can even finance it from their own funds or even borrowed funds for that matter. For such a large reform like this, a significant reform like this, such a step is not considered to be something which is significantly impacting the economy. So cess is actually a kind of a retrograde step with respect to the concept of GST.
Okay, so the first step that you pointed out is that this revenue gap that the council is anticipating may not even exist. Assuming sort of it existed when we go live with GST April 1st onwards, are you anticipating that this cess fund, which eventually will come to the center, will be disbursed fully to the states? And second, if not, what happens to that remaining fund? How will the government be able to use it?
Well, if you see that the whatever cess which they are supposed to be collecting, they need not do it now because you have 5 years time. You can at least allow the GST to be settled in the next coming 1 or 2 years, and council can always go back and revise the rate, or maybe that point in time if they found that there is a considerable gap in the revenue, that point in time nobody stops the council from deciding to impose cess at that point in time, rather than doing it ab initio. So assuming that this fund is collected, the central government's view is that the fund is not collected for the benefit of the central government. Whatever cess collected would be distributed for the states, those who have a deficiency in the collection of revenue, and the remaining would be distributed back to the state from where it is collected from. Okay. That's what the centers
to be given back in some fashion to those taxpayers.
So when you are collecting the cess, you know that from which state you have collected the cess. Right. So on that ratio, they can give it back to the states. The remaining whatever amount surplus remaining, or amount which is not distributed.
Right.
That's what is the view of the central government. So from what I have seen from the interviews of many of the finance ministers coming out of this GST Council meeting, everybody is in one voice say that it is very cordial, very constructive, and in principle they are not against the concept of cess. That scares me. Okay. That this could be a fait accompli.
Right. The second scary part is there's always been a debate on how cess will be levied, how will the input credit work, how would the credit, how would it be set off. Would you anticipate sort of hurdles and challenges under the GST regime to the same effect?
Well, it is said that the devil is in the detail. We don't know that what is the proposal, whether it is going to be levied at one single point, a last point levy, or is it going to be multi-point levy? We don't know. And if it is a multi-point levy and there is no set-off mechanism, then the cascading impact of taxes would impact the GST structure itself, which is one of the main positive point of the current proposed GST. So we are compromising even that for that matter. Should you decide to collect at the last point of levy, in that case, the product which are planning to impose cess are those products which are in a 40% bracket today. So in the proposed regime, they are proposed to introduce a 5-rate structure with a 0 rate for export, 6% and 12% for a merit rate, and 18% for standard rate, and there is a 26% rate. Yeah. And it's on the luxury segment, the highest segment, sin goods or prohibitive taxes.
So luxury
segment.
Goods, tobacco, pan masala, etc. Right.
In those cases, what is proposed is the difference between the current 40% rate minus 26% will be levied as a cess on these goods only, the one which are luxury goods. Now, having said that, luxury goods...
if you've done the math, the effective rate then will remain the same, or will it come down?
So that's what the argument is. There won't be an inflationary tendency because the cess will not go beyond the current rate of taxes which is already incurred by those products. And what are the products we are talking about? Luxury cars, not a problem, you can collect it in the last point, no issue. Then you are talking about cigarettes, gudka. These are even sold by kirana shops. So if the last point levy, how do you effectively collect the cess is a question mark.
How is it connected today?
Today it is cess is collected in each point of sale as far as service tax is concerned. On top of the service tax you pay cess.
Okay.
So and they allow the credit of that. So what is the mechanism they are talking about here is wait to be seen.
Okay, all right. Okay, we'll wait for that devil and its details, Sachin. The second issue which the council sort of discussed and pondered over was the issue of dual control, and the sense that we got from the finance minister and the revenue secretary statement is that because there is no consensus on the division of authority. The council's earlier decision that the state will have jurisdiction in cases where the annual turnover is less than 1.5 crore may need to be relooked at. Where is this tug of war to your mind coming from?
Well, I think this discussion is more of a territory war rather than anything to do with the convenience of the dealers or assessees. So if you look at the central government has nearly about 1 lakh of employees, and in the state government has more than nearly about 2 crores of employees in their payrolls. So the question is that who will control what and who will do the administration of the GST under this regime is largely depending upon how you keep all these employees busy with whatever workload they have. And therefore, there was a understanding earlier that up to 1.5 crores it will be a single control, not dual control, and those control will be given to the state authorities.
Right.
In numbers, 1.5 crore population of dealers would be more than 50%. Okay. So therefore, this 1.5 crores, if it's given solely under the administration of the state government, the central government expect a quid pro quo to somewhere balance it out. So now the states, and they suggested that the service part of the GST will be administered by the central government.
And their logic was, the states maybe at this point in time are not geared
equipped or experienced in controlling or taxing those services.
Right.
That's what their logic was.
Right.
But the point is that that is not acceptable to the states. So if states are not accepting what they are logically saying, which seems to be correct, then why should the central government give the exclusive control of dual control of 1.5 crore population is a question mark. And that seems to be the reason why they are rethinking about it. And end of the day, they decided that both of them will control both the supply of service and goods without any kind of cap. So be it. That's what seems to be the way of thinking.
Okay. Sachin, I think this is pretty much what the finance minister told us, the media, that the council deliberated upon today. From the announcements that came in yesterday on the base year, the input tax credit being part of the revenue definition, and the 14% being taken as secular growth, and today on the pointers that Mr. Jaitley told us that the council deliberated upon, are you satisfied with what has come out of this? What was supposed to be a 3-day meet but was cut short to 2 days?
Yeah, so as regards the compensation is concerned, it is a great news that all of that matter is settled to the satisfaction of both the state and center. As regards the rate, I have expected that there will be some kind of deliberation and some kind of issues before they are deciding on the rate, because it's a very sensitive matter. So nothing unusual, unexpected for that matter. But given the very tight schedule in which GST is to be implemented, we expect that perhaps the state and center move faster, which according to those the responses coming from different finance ministers from different parties, all are in one voice that all the discussions are positive and they will be able to come out with a final decision on 3rd or 4th November meeting.
All right, we look forward to that. Sachin, thank you very much for your time, and thank you for watching us live on Facebook and Periscope. We'll watch out for the 3rd November announcement and come back to you with the key takeaways from that meeting.